Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week and learn from it and plan for a better trade for the next week. And this is analysis for the week that's beginning tomorrow, February 20th, 2023. Let's get to the charts. By the way, if you're not subscribed and watching this, please subscribe and share it to maximum so that we have free subscription to keep us motivated. Let's get to the charts. Here we have the weekly charts that you're seeing here. It's a spinning top, small body, indecisive, big bull, bear fight definitely has happened, and it is also at a crucial support zone, which is now acting as a resistance zone. Same with the Banknifty right side charts, weekly charts that you're seeing here. It's a red, small body candle, indecisive, big wick sizes on both, just like how it is shown in Nifty 50 is showing an indication that there was a big bull and bear fight that happened last week. And then what else can we make out? Let's look at this chart. This is again the weekly charts with a trend line drawn, which shows the major support zone, which was breached 4 weeks back, and then it was recovered beautifully, and then Nifty is trying to hold on to that above the trend line. But look at Banknifty. It had fallen down that same trend line 4 weeks back and had big trouble in closing above that, and it's continuing with that in the last 3 weeks. So the 4 weeks after it's breached below the trend line, still now it has not been able to cross above that. That's where we are, the weekly summary. Let's go to the daily charts. This is the Friday's candle that you're seeing here. Again, a spinning top, Nifty, small body. Any small body is indecisive. Big bull and bear fight happens. Market is confused. There is indecisiveness. That's what happened in the Nifty on the Friday's daily charts that we are seeing on the right side of the Banknifty. You can see that it's a bearish candle, and it had a bounce up also. It's not a hammer. It's a big white rich bearish candle that you're seeing on the Banknifty. So Banknifty in general is weak, is evident from this chart that we have seen that it is unable to cross above this major trend line from where the earlier breakout had happened and where it had slipped 4 weeks back. So Banknifty is showing that weakness clearly. This is another daily charts. Bollinger Bands indicates the volatility in the market and the bias, and the movement of the price action also is indicated here. So clear sideways is evident here with the Bollinger Bands, both of the bands contracting from the earlier expansion towards the downside, right? And that's evident on the daily charts of the Banknifty also. It is contraction that is happening, but Banknifty has got a close of the price below the median level, which is having a bearish bias. Like sideways consolidation with the bearish bias is what Banknifty is. While in the Nifty it is sideways consolidation with a bullish bias because the price is close above the moving average, 20 moving average we are talking about, right? So let's get a few more numbers what Zalville also gained. So 84 points gains, 0.5% gain, and it is 1% loss that happened in Bank. If you look at the contrast, look at the contradiction that is there. The Nifty is gaining the points on a week-to-week basis, and Bank is lost double of what Nifty is gained. So definite bearishness is evident in the Banknifty for sure. And Nifty again another has closed above the 20 weekly moving average, but Banknifty is close below it, and Banknifty is not able to rise above the trend line, which is acting as a resistance now from where it had broken out earlier. So that zone is still not captured by Banknifty, but Nifty has retaining that, and it has closed above the 20 weekly moving average. So there is a definite difference between the Nifty and Banknifty. So evident bearishness is visible on the Banknifty for sure. The daily charts again, as we have seen, it's a 92 point. It is bearish both on the Friday's candle, 92 points on Nifty, and have 500 points lost on Banknifty. So the last 2 days of those Friday has been very bad for the Banknifty. That's what Banknifty has completely turned and a big turn bearish, and the bearishness is indicated that the fact that it is close below the 20 DEMA, the daily exponential moving average, 50 DEMA and 100 DEMA. All of this, it's 100% sure that something has to be done on the bearish of the Banknifty. Can the Nifty go up without Banknifty? It's not possible, right? That's common logic. Now the fact that we have to see is we are having a lower low pattern, right? We are having a lower low. So the swing high previous is out there at 18,200, and here it's out there at 42,000 above. That is not captured, and so that means if it is facing resistance and so on, means that very likely that it can go below the 17,400, 350 kind of zones and then make another swing low. Same with Banknifty also. If it is not able to take out this 42,000 above zones, which is the previous swing high, the lower high and lower low pattern would continue, and then we may be heading towards making a lower low is what is indicative of the price action, simple price action, right? All the bands contracting sideways indication with bearish and bullish contracting between Nifty and Banknifty. We already seen that. So that's a summons of the substance of the price action. Let's look at the support resistance levels. Nothing much has changed except the fact that it is following the lines that we had drawn earlier. So 140 nearby previous resistance on as well. Nifty had reversed on Thursday, right? And that's going to be a resistance. And we have resistances before that as well. So the first resistance would come in at 79.59, which is the previous swing high. And above that you have Fibonacci 38 resistance, that's at 1870, that is there. And then you have the 18142 where it reversed on Thursday. And above that you have 18202, which is the previous swing high, and it's a lower high pattern. And above that will be breach of that. 260 also. 18200 to 262 will be crucial zone. Above that you have the rounding number 18200, 385, 440, like what goes. Supports while downside would be Fibonacci 50, which is just still maintained 17825. That would be a good support, and below that 17761 previous swing low, and then 17650 previous swing low, and Fibonacci crucial support at 17568 69, right? 85 570 17570 is the crucial downside support zone. And after that you have long way back to the previous swing low nearby zones at 17328. So that would be a major zone where the previous swing low says. That's the major support on the downside, and the distances on the upside would be 18200, 262 that zones. Moving on to the Banknifty levels, you can see clearly that if you look at this descending wedge that is there, and look at the Nifty, the descending wedge, it almost broke out of that, but it was a fake out and then fall back, and it has taken support above the wedge trend line top. But the Banknifty had a long way, around 1000 points to go to breach that and break out. That did not happen in the Banknifty. So Banknifty was showing bearishness last week itself, right? And it's evident, and it has fallen back, and you can see that the first support down here would be Fibonacci 650 previous swing low support, right? That's at 41,000, right? 4100. That zones will be good support. After that you have Fibonacci 48,786, then Fibonacci 6139, 990, and 39,759 after that, and then 39,200, the previous swing low, new swing low would be made there. So that's a long way to go, but that's where the supports are residing. And upside you have the Fibonacci 38 retracement level, which is now act as a resistance first, and then above that you have 41,836, and then 42,000 rounding number resistance, and above that you have 42,231, 42,331. That would be Fibonacci 23 levels, and that's major breakout zone. Above that, if it goes, you can say it is broken out of the descending wedge pattern, and then above that 43,000 would be breaking out of the previous lower high pattern on the Banknifty. So until 43,000 is cleared, we just don't know what's going to happen. We can just say that sideways, and we may be having a bearish or bullish bias, just like how Banknifty is having a bearish bias right now. So that's all that we can say. So those are the levels on the upside and downside that we'll watch for the next week, and all eyes are on as to if if that lower high made, swing high made, is done with, and we're going to make a new lower or not. That's a question, right? Because Bank is extremely weak. So levels make a note. Levels are very much clear here. You can make it out of those and correlate it with the options and the futures option interest data that we'll be seeing later. Moving on to the momentum and the trend indicators. RSI is what we use for tracking the momentum, and then you can have look at the weekly charts of Nifty and the Banknifty on the left side, and the daily charts on the right side. You can clearly see that the RSI is sideways and rising up. The RSI is sideways and falling on the Banknifty, right? Sideways and rising up the Nifty. So definitely there is weakness there also on the Banknifty, the momentum also, but both are sideways. On the lower time frames, you can see that it is both are sideways again, and both are falling down also in the short term. So short term, sideways movement with bearish, sideways movement with momentum falling, and long term there is a difference of falling in the Bank Nifty and sideways rising in the Nifty. That's what the momentum is standing at. Look at how the trend indicators are. So the trend indicators on the Nifty, we are using the ADX for the trend indication, is bullish on the Bank Nifty. You can see that the trend is bullish. The ADX indicator is showing it's still bullish, but the Bank Nifty is bearish. So that is we're talking about short term. The short term trend is contradicting between bullishness and bearishness in Nifty and the Bank respectively, but the long term, not long term, the medium term, that's weekly chart facing, that it's bearish on both. But there is a difference. There is a rising bearishness that is there at the Bank Nifty. That means the bearishness is increasing in the Bank Nifty more. So on the medium term. So right. So that's where the sum and substance of the momentum and trend is that we have sideways momentum and contradicting trend. The trend indicator is a little contradicting between the Nifty and the Bank Nifty also with respect to the ADX as indicated, right? So let's go ahead and see the volatility. Volatility can be, we already tracked the volatility to some extent in the Bollinger Bands. So there's one more thing I forgot to say here is about the Bollinger Bands. Bollinger Bands is showing a volatility divergence. I forgot to mention that. That's nothing but the W pattern that is shown and is studied along with the Bollinger Bands. So if you're not aware of this, just check the playlist of the technical analysis. You have a volatility divergence video on that. You'll understand. So basically, it will be making a swing low outside of the Bollinger Bands, and then it will make another swing low inside of the Bollinger Bands, and then it will bounce up and forms a W pattern. That breakout could be really good, right, on the long side. Same with the upside also. Here it is a long side. So for that to happen on all the indicators, it has actually made a swing low. Now it has to make a swing low inside. That means it cannot breach. So it is so there is a very likelihood that there is a swing low that can be formed within the bands, not outside or upside or downside. Within the bands, if another swing low is made and a W pattern is formed, then it will be powerful. But for that, both indices would mean that it may have to go a little more further down towards probably 17,500 nearby zones, and then make an upswing there. So that's something that I missed on volatility divergence. That's another pattern that is seen. Getting back to the volatility, it's also studied with the India VIX. So India VIX, especially for the options, it indicates that India itself was very volatile. We can see that spike is 3% only, but the thing is that 3% happened after 20% of cool off. That's how the volatility behaved last week. 20%, take a dip at 20%. That means half of the week the market was moving up, and the rest of the week it was moving down. It was crashing down. It was a V-shaped move that happened in the market. That's certainly that's indicative of the VIX also. It's 20% cool off, and then finally the 20% up move, and then further 3% spike up. So that's 13 now, still in the lower regime, but you have to be careful. Since it has spiked up so much, there is a chance that it can spike up and get outside of the lower regime also. The possibility is there, but it had gone substantially down below the 12, near the 12 kind of levels, and then spiked up. That's the particular behavior that happened with the VIX, peculiar behavior. So it is basically a V-shaped move. If you look at the market study also, what exactly happened in the last 5 days was 3 days of up move, and then all negated and given up in 2 days of down move. 3 days of up move, 4th day given up everything after. So high, and then given up all that downside. So that's the price action that happened yesterday, and the VIX is also indicative of the cool off and the spike up. Right. That's very difficult to trade when you have V-shaped moves like this happen, right, within the week. All the weekly options calls will have big charts. So options data study of the options, we'll see that later. But futures is showing that it's a short build-up that happened Friday. Obviously, it was given up so much, and then it will be short build-up. So for February 22 to the next expiry will be a monthly expiry, and the options for the options data is showing that the PCR is. There is a contradiction there also. It's not bullish enough that for the Nifty 0.75, but it's clear closer to the bearishness is what is indicative in the Bank Nifty. It's 0.56 PCR. So PCR also contradicting, and showing that Bank Nifty is weak. Now, expiry options for the Feb 23rd monthly expiry. Monthly expiries are normally very volatile. And February 23rd expiry. Look at what it's showing. It's bearish that's dominating. It's a call writing that is in dominant, and where all the call writing is written. It's at 18,000 is having the highest call writing that is seen at 40, and after that 18,500. So 18,000 would be very crucial. Downside, it's not too much. 70,500. The first 18,000 is where the second for the first highest number of put writing is seen. After that 70,500. So it's 18,000. Is going to be very crucial whether Nifty next week would be able to close above that or no, close below that or not. Right? That's a key question. I know. So it's acting as major resistance as per the option strata also for the monthly expiry. So 41,000 is where the highest call put writing is seen, and 41,500 is where the call writing highest is seen. Right? So it's a 500 points range. 4 days to the expiry, and 40,000 and 44,000 very wide ranges where the second highest put and call writing is seen, support and resistance levels. Put call ratio is contradicting between bull and bear in the short term. Between the dices, what we already seen, short build up is what. So overall bearishness dominates as for the options and the futures open interest data. How did the industry sectors perform? That's analysis that we're going to do. We have the charts for that, right? How the sectors performed. So it was what was up? FMCG was up, IT was up, rest is all down. So metal is down, auto is down, pharma is down, reality is down. So all that is up. The IT has been doing good, moving up, and it's having a spinning top also. So IT, the bullishness is there in almost the medium term charts as well as the short term charts, and so it may be time to take tight stop loss long positions there. And the metal is down bearish. Right, pharma is also turned clearly bearish and stay away from these two. Auto sector, which is 0.7% down, is kind of sideways. FMCG also is kind of sideways. Reality, short-term bearishness, but overall medium-term it is sideways. So there is one industrial sector which is showing some bullishness, and two sectors which are showing clear bearishness on the medium term. Metal and pharma. IT is bullish. Others are all sideways. That's the picture that you get here. If you look at the IT index, you can see it's a parallel channel and it has been moving up, and then we have a resistance upside there, and momentum is almost trying to get into the bullish zone so far as above 60. Metal is clearly ascending. Wedge breakdown has happened, has fallen down 3 weeks back and it's trying to consolidate before moving up. It has taken a support of the RSI 40 down there. It has taken a support there. Now we have the autos that you're seeing here, and it is having resistance, and it is fallen after hitting that, and the all-time high also, and then it's a rounding pattern breakout that has happened. Now it's consolidation within the range form zigzag is happening 3-4 times now. That looks like it may be hitting down with the bearish candle. Right? Momentum has hit resistance as well on the RSI 60 and then fallen. Pharma down here, you can see that it is broken out of the panel channel and then failed to sustain resistance, then fallen back. Seems like it's holding on, consolidating above that, but it's heading south. Also, it has taken a support, so it may halt at the down move somewhere nearby. It has taken a support at the RSI 40 down there. Right. FMCG is again just like how the auto is doing. It has been formed. It is doing some consolidation of rounding pattern breakout, but it is holding on, still not fallen off from the RSI 60 down the sideways. It is holding on the bullish zones of FMCG on the medium term. Reality again consolidating after the breakout and retracement has happened, and then it's sideways. Although, right, so yeah, stay out of metal, stay out of pharma as they are clearly indicating bearishness. IT is giving hopes of bulls, and others are sideways. It's some and substance. Looking at how the industrial heavyweights, 7 heavyweights that we are looking at. Let's analyze each Tipsy Bank. It has been showing bullishness since very long time. Right, it's consolidating after a flag and pole pattern, but it's very much in the bear zones, and it's not able to come out of that bear zone since long. But that breakout, if it happens whenever, it will be big. But it's a bear zone clearly where the flag and pole rally is happening, and then In spite of all that happened to the markets, with the 20% cool off, 28% up move, and all of these happenings, HDFC Bank has remained where it is, well within the flag. HDFC also forming a flag, and bullishness is maintained on the perspective, but Reliance has been moving sideways since a long time, and that's exactly what it's doing. It has taken a support at the bottom of the rectangle formation and then bouncing up and then moving. It has taken a RSI support also. So sideways, Reliance and bullish HDFC twins. Next up, it's Infosys is having a doubly pattern. TCS is broken out. Momentum is in the bullish zones almost, but Infi is having trouble getting them and facing resistance. Immediate resistance, gap resistance, major resistance, where it had been rejected multiple times. So it's very crucial for the Infi to break that before you can say anything. But if TCS also showing some red, but it is clearly broken out of that trend line and then trying to move up. Right, sector index is bullish, but Infi is having some trouble moving up. That's what it shows. But TCS is in safe place. ICICI Bank had fallen off, major correction after head and shoulder, and then taken support at the RSI 60, RSI 40, and then bounced up, and then again facing resistance, the neckline of where it had slipped earlier, weekly charts. Kodak Bank down here, it's consolidating and it has been going up and down. That's sideways climb track from bearish zones where it had fallen down, then again sideways, and consolidation continues. Right. So just to summarize, HDFC twins bullish, land sideways, IT trying to move up, but resistances up there. ICICI Bank has fallen down and recovered completely, and then facing resistance the neckline from where it had fallen down, and Kodak Bank as usual consolidating sideways. Moving ahead, institutions, how did it perform? 4,000 crores of buy happened that high. That's surprising. It's not negative, there's a mistake here, it's positive. It's net buying that has happened, 4,000 crores of the cash by Fyers, which is good news after a long time. That's they're coming out with their net buyers. DI is a net buyers as well. So it's a week with positive institutional buying that has happened for some reason, and that's a summary. Let's hope this continues. Moving ahead, global markets and global commodities. Let's look at the currency first. The dollar index has moved up. That's 0.30. That's an 0.5% of up move that happened. 103.88. Dollar index just corrected substantially, around 12% of correction that happened here, but seems like it has taken a support and climbed back into the neckline zone from where it had slipped slightly a few weeks. Also taken climbed above that and then holding on there around 3.88. Looks like it's heading back to it. It may be consolidating here, but looks like it might not be cooling off more from here. Look at the currency pair USD INR. It has moved up along with the dollar index, and this formed an inverted hammer. 0.3% gain has happened. So rupee is getting weaker again. Near to 83 now. 82.73. It's not good. Momentum is bullish. While dollar index has cooled off and solid sideways and rising, but the dollar index momentum has turned and climbed back to the bullish zone, which is not good. Rupee weak again. Summary. Oil. This is the panel channel that is unable to cross above this 84 zones, and it's cooling off and hitting resistance again and again and consolidating. This is good. 76.4 is really good. But the thing is, this had fallen bearish up to the 70 levels and climb back and sideways. But as long as it's below the 80, it should be fine. So that's what crude is. How about the story of the gold? Gold had turned bullish when the market was falling down, but it has hit resistance on the channel top and looks like it's getting south once again. Momentum has slipped to the sideways. Trend also is about to cross over to the negative zones. A few weeks back, that was not the story. That's the global markets, the US market, some other market. We're trying to analyze the Dow Jones, S&P 500, and the Nasdaq. This is the Nasdaq on the top. This is S&P 500. On the left side, you have Dow Jones. Dow Jones, it's a descending wedge everywhere, and it's consolidating for how many weeks now? 1, 2, 3, 4, 5, 6, 7, 8, 9. So now 10 weeks it's staying in the same zone and then trying to break out. Always sideways in the medium term charts. We're talking the weekly chart, so it's unable to break out of this and close above the green. That's not happening. So that's at resistance is summary. The top of it is ascending wedge breakout zone, crucial zone. So to give a close watch. Same with Nasdaq. Nasdaq actually has blocked now, but it didn't need it as a resistance zone, and then it's stuck there since the last 3 weeks. Now here, simplified to the broader index of the US markets, you're seeing the same thing. Managed to just break out and then stuck there. So in short, the US indices are at resistance, and we don't know whether it's going to break out or it's going to come down. So it's a crucial zone. So to keep a close watch is all that we get to. That's about the US markets. And so in short, the global markets, especially the US indices, that we are more concerned about is at resistance, and the dollar is rising and rupees weakening, which is not that great. Crude is pulling off, which is good. Going to the hedging instrument has reversed after hitting the top. Once the market has stabilized and recovered, and that's a summary of what global markets are coming to say there. Now, moving on, the stock picks, two actionables. One is TVS Motors. It's a weekly chart that you're seeing. It's a rounding pattern breakout that happened, and very beautiful breakout. And after that, it was consolidation. It pulled back, moved up, and there is a possibility that it can break out from that consolidation box rectangular top. So to put type stop losses, there will be every chance that it can consolidate 5-6 times like this in the same zone. So you can play it differently. If you can wait for the candle to close above and then have a long position taken, because the momentum is just climbed. There is a divergence here, negative in nature, but the momentum has climbed just into the blue zone. So if it sustains after a few days, and if you get a green close above this, that means that's time for an entry, and that's one way of going long. Another way would be to play this by shorting, in case you see that it's again reversing towards the bottom of this rectangle. So you have to short at this and then cover a positions at the bottom. So it may continue to do this zigzag for a long time, or it could consolidate and for some more and then break out from here. So we are looking for that breakout opportunity right now, because the momentum and the trend are bullish in nature. The trend is also in rising medium term and short term, and there is a price pattern also in showing positive signal. So, but you never know how it may react. So that's why I said another way of playing out would be on the short side, but with tight stops. So everything has to be played with tight stops. So it's something. Right side you have HAL, Hindustan. That's an ascending pattern, which is also having a consolidation that's seen in the rectangular box that's drawn here, and then it has taken a support at the bottom, and then both the rectangle as well as the ascending wedge, and then bounced up, and there is every chance that it can break out, but it's not confirmed. So both of these trades are not confirmed, and if there is ideally if there is a close happening above this consolidation range, so already enter. But if the price moves above this previous candle high also, you can enter, but with tight stop loss at the candles low, weekly candles low. Entry has been a lot of time frames, but exit point is what I'm talking about, the low of this entry candle. So it's ideally you should enter early on the breakout confirmation, but you may enter before that also, since all of the momentum and trend indicators in favor. You may enter, but with tight stop losses, ready to take the happy loss. So in this scenario, it also the same. It's a rounding pattern breakout that has happened. Neckline support is there, and beautiful breakout has happened, just like TVS. A beautiful breakout has happened, and it is consolidated since last several weeks within this range, and there is a chance that it can break out further from here. That's what it shows. Okay. But both of these have got divergence, which is negative, not positive. So you have to be cautious on that. So these two are long opportunities, but you have to keep tight stop losses, because negative divergences are there, and these are not 100% confirmed signals, but since the trend and the momentum is in favor in the bullish zones, we are entering it. But price pattern has to give some more confirmation. Either we can take the risk of entering it early, or we can wait and take it next week on confirmation of the candle, right? So yeah, we don't know how many weeks it may consolidate. There's no guarantee for that. Same here also. So right. That's a two actionables: TVS Motor Company and these are all Lotex. Oh yeah. This is another way of playing it in Nifty indices, not on the stocks. This is basically a bear call where you're selling a bear call, which is a calendar in nature. So it's a calendar spread basically. We are buying and selling at the same strikes, ATM strike more or less, not ATM, one ATM plus one, 79.50. We are selling and buying, but the selling is happening for but the buying is happening for the far month, not the near month, not month, far week. So it's a far week buying and a near week selling, and that's a spread. And that's what advantage if the volatility spikes happens for the RiskReward is not that great, but the range that we're getting is very reasonable. And the max loss is also very limited, so risk is very limited. That's the advantage of this. You'll have to enter it Wednesday, before the last day, waiting for the last day. You'll have to enter, get the volatility spike also. A reasonable range of the assumption is that 17,800 would be a good support zone, and 18,000 would be a resistance zone. The market may consolidate this zone for one more week is the assumption, but if that fails, then you don't take the happy loss, but exit. Don't wait for the last day. That's the actionable counter spread on the Nifty. Now that we have studied all this, let's wrap up. So the indices basically try to move up 3 days and then fell in the selling pressure for the last 2 days. Right, just fallen, just broken out of the wedge, descending wedge on the Nifty, broken out, but Banknifty has not broken out. It has broken out and then fallen back from where it broke out, back into the trend line of the descending wedge. So it's an attempt to move which failed and then back to square one. But week to week basis, Nifty is gained 0.5%, but double of that is lost on Banknifty. Banknifty definite weakness is seen, and Banknifty is unable to even climb over the crucial trend line resistance. So Banknifty is in trouble. All other indicators and parameters that we consider also says that Banknifty is more bearish as come. So Nifty may not be able to sustain on its own and then move further up. Right. The trend momentum, everything is kind of bearish. Trend is not bearish. Trend you can say it's mixed back. Banknifty trend is negative, positive on the Nifty. Momentum is side. You can't say it's bearish. It's sideways. So overall sideways with negative bias is what it indicates. Right? US indices at losses and so on. If it falls down, open interest is bearish. Clearly, VIX is 20% spike. Just 2 weeks, and overall it's all in favor of the bears. Right? So that's why I take a mild bearish as per the charts and the indicators and price action. What chart says, I take a mild bearish view. That's why institutions, their net bias last week, that's bullish. It's in favor of the bulls. The VIX is remaining still in the less than 30 or 13 range. Crude is low, so it's all good. And 20 weekly moving average has not broken Nifty. Although Banknifty has broken that. So these are all positives in favor. So anything would happen, but my view, as well the charts indicate you, as of now, I take a mild bearish view for the next week. Right? The VIX is spiked to 28%. There is, it has fallen 20% and then spiked up. So that means there's something still, fear and greed factor is still there. Is market resistance, so you have to keep a close watch of this. The global cues and all that, great inflation, recession, interest rate hikes, COVID, war, all these things are still there hovering. So anytime that VIX could spike up and reach the other end of the regime, and then things can go wrong. So you have to be careful. Cool is cool up, it's good, but rupee shooting up, dollar is rising up again. So that's trouble. So about the median term range is 7,300 to 36,800, and 250 to 43,000 the higher side. On the lower side, 7,300 to 36,850 Banknifty on the lower side. Right, so that's all the overall range. On the short term, also 18,250 above close. Only that will indicate that there will be further up. Until then, it will be consolidating with bearish or bullish bias. It goes like that, right? Similarly, as long as the new swing low is not created, you're still in the sideways only. Even though it may be bearish bias. Such as in substance, yeah, they always say use hedge strategies and do not have overnight risky open naked positions, because next day morning your capital may not be there, because if you're not hedged, you don't know what you may lose. It could be huge, and you're not be in the game itself. So be cautious on that. Don't take out net risk. Always have hedge positions. And You can have button spreads that is taken with this hedge, or you can have non-directional strategies where you're neutral. You only know the probabilities of how much market can swing on the other side and not exactly how much. Right? So that's one way. And also, if the market crashes, there will be opportunity for it to go in SIP mode and invest. Right? And it can be done with option strategies. Also, check out the playlist on that. Right? So many of the things that is discussed in this may have technical analysis elements that is already there in the playlist, separate videos. Check out that, then you'll understand better. So that's it. So just to remind you that if you're not subscribed and then watching this, please subscribe right away and then share to your friends and colleagues. And then we have very few subscribers. Appreciate your help in this regard. And we have also paid services that's coming up in the Telegram channel. So we're having weekly analysis and detailed study on market levels and all that. So check out that. It's very cost effective and then it works out. Right? So yeah, please subscribe, like, share, comment, and thanks for watching. Happy trading, happy learning, happy investing. Bye bye.